Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. Well guys, today I have posted some information Euro update, now a form and a text version of Euro update. So, and this information in fact is valid for gold market as well, because the fundamental data that come from the United States markets will make an impact on the gold market as well. But currently on the gold market there are two significant issues. First of all, the inflation that has been reported yesterday shows the moderate numbers, and that keeps gold under pressure. That gold in fact reacts on the inflation very much, and if inflation has been reported at the moderate pace and in fact even lower than the expectation was on retracement or on inflation, that is not very positive sign for the gold. At the same time, the physical demand, as the traders report, stands very flat. It's really anemic, and most traders point that the one reason why gold still hold above 13 even area is mostly the geopolitical tensions. That's why the currently gold market is very nervousness and I could say emotional. From the technical point of view, on the daily chart we see nothing new. So market just showing this retracement of the result. We have talked about this a lot previously. Now it shows some minor action to the downside, and most interesting information for us stands on the 4-hour chart and on the hourly chart. On the 4-hour chart, recall that we have discussed this potential ABCD pattern to the downside. And we said that but by some really significant factors, the retracement to the downside looks more probable. Reaching of 1270 area looks more probable than a possible upward action. And yesterday market has erased the chances of the butterfly, because market has taken out of these lows and this potential for the butterfly was vanished. But at the same time, if you take a look at the nature of how market behaves, on the style of this action, it looks not very impressive. It doesn't look like here, right? We do not see any acceleration. That's a bit choppy action. So there's significant retracement direction on the data and flat action. This makes me think that we really could get godless 222 buy pattern. That's the risk for this possible downward action. It doesn't mean that this downward action will be vanished and will fail and will not happen. But it could start not from that point, but it could start, for example, from that point. If market will show got this 222 ABCD down, 222 buy, initial thrust, ABCD retracement, and will show this ABCD to the upside, in this case we could get after that the 222 sell, and finally we will get this ABCD pattern as well. That's the risk for the possible action. That's really possible, mostly because this really choppy action. I can't say that it definitely will happen, but a risk exists to get there. Also, this relatively is confirmed by hourly chart. From the one point of view, we could say that market has broken through this support, okay, short-term support line. That was really fast breakout. Later, market has retested this line as some sort of the kiss goodbye and turned to the downside again. That's the first view on this current situation. From that point of view, market should continue to move lower. But from another point of view, we have this falling wedge pattern that potentially is bullish, and in general the price action inside of this wedge looks very choppy. It's not looks like the continuation to the downside. It doesn't show any continuation. There's acceleration to the downside. That's why although overall fundamental situation on the gold market are more bearish rather than bullish, and only geopolitical tensions mostly support the gold market right now, still And we probably should suggest that this downward action will happen, but still risk that it could happen right from this point, and that way we initially could get first ABCD action to the upside. This risk still exists. That's why I think, guys, that we should wait a bit and to get more clarity from the gold market. Because I do not see any clear signs that could strongly confirm either one or another scenario. So I do not see currently clear bearish signs that definitely point that market should accelerate way down. And also I can't see the clear bullish signs that point on the possible real acceleration. So that could give us this 100% confidence that this will really happen. We see some hints as on this development as on that one. And all of them we have discussed already. So that's why if you could find some compromise between these scenarios and you could able to take some position that will suggest and taking into consideration both scenarios, you could do this. But currently, guys, my personal view is maybe better to wait one or another trading session to get some more clarity on the gold market and understand what direction will prevail. Well, that's our current view on the gold market.